Hi, and welcome to our webinar. This is Geri McHam from the Estate Planning Source. For those of you who know me, we know each other quite well. And for those of you who don't know me or my services, the Estate Planning Source's services, we do offer estate planning documents for your clients and connect you with a financial advisor and or attorneys, depending upon whether you're an advisor or an attorney. If you want information on our program, we'd love to talk to you and see if it would be a good fit for your practice. So for my guys who are on here, welcome, and I'm so glad to have you on. The life settlement I found out about last year with Jeff Marsacci and his financial services guy that he works with, Mike, and they ended up sponsoring our Advanced Institute last year, which was really awesome for us. And, you know, it's a good benefit to you guys because we can provide some fun stuff to do when we do have the sponsorship, and they may consider doing so again this year. The idea of life settlement, you know, it's an old one, and Jim will talk about that, I'm sure, you know, the history a little bit of what's gone on with life settlement. But he's with one of the largest companies, or probably the largest life settlement company, who buys up a lot of the contracts for the other life settlement companies, which I found to be very, very great because it offers a lot of, you know, stability and can be really of value to you because they are one of the biggest companies that provide that. To me, I talk to people all the time. We have clients who call in here. You know, we've done over 70,000 trusts, and we have clients who call here every day, and they're talking about getting rid of their life insurance policies because they're old. Then they decide, well, I don't want to keep paying on that life insurance policy. And that's where life settlement services can come in. And Jim's going to go over the benefits of life settlement, maybe some of the stuff about the company, and talk to you about some of their platform and how it can work for you. So I'll go ahead and turn it over to Jim. Jim Purdy is with Magna Life. And go ahead and talk, Jim.
All right, thanks, Geri. And we look forward to coming out in Tennessee and meeting all your reps. And of course, we're going to sponsor an event and do something really good for you guys. So grateful for having us last year, as well as this webinar today. And we look forward to a long, prosperous partnership. The settlement industry is really at an exciting point. It's finally at the stage that we have enough regulation. 43 of the 50 states are regulated now. 9 states require the carrier to disclose the settlement option when a policy goes into grace. And of course, leading the way is California, where they require the legal fiduciary to disclose the option. There are some really good factors that also have wind at our back because it's certainly a seller's market. And the first one that we'll go over is that there's 500,000 seniors that are letting policies lapse on an annual basis. So really only 1 out of 400 are doing settlements that would have actually qualified for settlements. So there's a ton of supply out there, but people just don't know about the settlement option. So you have the largest growing segment of the population are the baby boomers. We're going to go from 27 million currently to 80 million in the next 18 years. So that's a significant push. Of course, we know that healthcare is rising at twice the inflation rate. So you have, you know, a massive amount of policies lapsing over $100 billion a year. You've got this giant segment, 15% of the population going to 20% of the population. And then you have a lot of people that are really, we just don't die the same in this country that we used to. People used to die all of a sudden, and now they're dying in facilities and in long-term care. And this type of care is extremely expensive. So, you know, before we get too much into how it works, I wanted to share a quick story and something that we recently went through. We found that sometimes when you see a family going through a care situation, they're really getting stressed out physically and emotionally because they may not be suited to be a caregiver. As that progresses into having to hire outside help, then sometimes you're laying on the financial hardship of what care costs. And when you're as an advisor for you guys that are out there helping clients, it's tough when you're in a situation and maybe you're managing money or you've done some work on the fixed side. It's tough when you just don't have an answer for them. It's not like you can buy leverage care, at the point where they need it the most. So it's hard to find these solutions, and the families end up being emotionally, physically, and financially really in a tough spot. So we feel that a life settlement is going to realign the family's interest. It's hard. You don't want to be the child that hopes their parents pass away because you're going broke. It's always nice when you're in a situation and you as an advisor can say, hey, before you settle or surrender that contract, maybe you could try to settle it and see if there's value. It's nothing better of a feeling besides the opportunity of to make revenue, and which we'll cover in a little bit. There's no better feeling than when you're able to align the interest of the family to where there's enough money from a settlement to pay for the care, and the kids are then now rooting for mom and dad to do better. So we'll come into how it works. For the most part, whoever's health changes the most since the issuance of the contract is going to have the highest settlement value. So you have the first line is representing what I would say the carrier issued the client at. They think they're obviously on the left 100% alive, and they're going to be 100% dead, and the carrier will charge a certain amount for that insurance based on that, how long that or short that curve is. Obviously, somebody that's heavily rated is going to be a much more expensive policy from somebody that's issued preferred best. When you have a deviation from that line, where the blue line is representing what their current health path is, so it's very different than what the insurance company thought it would be. That's where your settlement value, whoops, I had a little colored thing there that was going back. Let me pull back into that. This gray area here where your settlement value comes in. So it's the deviation between their old health that they were issued at to their current health. We found that I'm 16 years in the business. I've taken 2 companies public in the life settlement space, and this is the 3rd provider I've worked for. I found that the majority of the cases that I'm working on are issued standard or better throughout history here. And they're also, we break down health class for insureds into 5 categories. Whoever's the same or better health than everybody else they know, the ones that would be a little bit worse than everyone else they know, much worse, or significantly impaired. So those 5 categories are going to be the driver for you to field underwrite. And it seems like the majority of the settlements that are being done are people that were issued standard or better that are then saying that they're worse on their health. There are exceptions to this. If you have universal life policies that have no lapse guarantee provisions, those contracts hold what's called shadow account value. So anytime you've ever had a UL with a no lapse guarantee, if it's been enforced for more than 10 years, or there was a 1035 done on it, or any kind of short pay scenario, you then have a bunch of sub account value. And in those cases, a settlement offer often is far more than cash value, and the person could still be in good health. So you don't need health deviation when you have the fact patterns of ULs that have been around a while with NLG provisions. Qualifications are pretty basic. I say 65 and up, but really there's no age limit. If somebody was significantly impaired, we could do deals on 40 or 50-year-olds. It's just that the investment horizon really isn't much longer than 20 years. Now, Magna is owned by a $4 billion fund, and being the actual fund that's going to hold the assets really puts you in a good spot to where we're trying to drive yield for our investor, whereas the majority of the settlement industry really doesn't want to work on anything that has more than a 10-year life expectancy, because most of the industry out there is really just groups that are trying to flip deals to an investor for a profit or for a margin. Now, to give you kind of relativity of what that means, Vita Capital deployed $1 billion in the space last year. 800 million of it was through the tertiary side, where they're going institution to institution, not regulated because they're sophisticated investors. And 200 million was through Magna on the secondary market side. That's heavily regulated whenever you have an insured selling a policy to an investor. There's a big disparity there, and I think it's important for people to understand that by doing business with Magna, you're cutting out really 1 to sometimes 2 mouths to feed in the transaction. And because Magna's not necessarily trying to make the highest margin on deals, we're trying to originate for our investor that owns us. It allows us to do deals that maybe other groups or other people in the industry won't do because the life expectancies are too long. So it's okay that they're 65 because that's what puts them right in spectrum. Social Security tables have everybody dying mid-80s, maybe 90. So you're right in that range. It's nice because there's a lot of term conversion products out there where their conversion limits are going to age 65 or to 70. So that people that have changed in their health, it's a tremendous opportunity for you to do a settlement. You as an advisor will get to make the money on the conversion premium from the carrier, as well as some money on the settlement side. And then from your client perspective, you're competing with zero and they're about to have no policy. So it's a really high probability of getting a deal done, as long as that arbitrage, you're issued standard or better in the beginning, and now they're highly rated or uninsurable. If that exists, then you've got a really great transaction. So don't be bashful if the policy's only 100,000. We like all the transactions. It's good for our fund to have more policies and a diversity of size. And don't worry so much about the age. It's really the arbitrage that we're looking for. Process is relatively simple. We send in a HIPAA, we get medical records and an illustration, and we should have the ability to price within a week to 2 weeks at most. Most of the time is how long it takes for us to order outside life expectancies, which we're happy to pay for on your behalf. So it won't take long to price. If you have one of those policies that has a no lapse guarantee provision and you think it, you might have something there, by all means, reach out to me at the end of it and I'll give you the additional items list. The process is pretty simple. We would put an offer out in writing. You would sign the letter, tell me how much you're taking in compensation so we know how to create the documents, and then who owns the policy and who's the beneficiary. The closing package would go out. We're verifying who they are and the information about the policy. Once that's through compliance, we fund the escrow account. Escrow account then gives change forms to the carrier, and then once we're the owner, the escrow agent would release the funds to your clients, and then commissions are released 15 days for your rescission period after the clients get their money. So relatively simple process. So far, the record, we had an agent out of Florida, been in the business a while, certainly knew what they were doing. They gave me complete medical records and an illustration and a HIPAA, And by the end of the week, we had made an offer. We were pretty aggressive out of the gate. They took the offer, let her turn it around that day. We put closing documents out the next day. The agent flew to Massachusetts where the deal was at, which he had his settlement license there and his non-resident license, completed the transaction while he was in the air. The back office were sending me all the items. By the end of the second week, we were through compliance and funded escrow. Now that particular agent was able to get changes done in 2 hours with the carrier. So from the day they submitted the business to us to the day their client had money in their hands, which on this case, is a $3 million policy, $56,000 in cash, and we had offered $1.5 million on it. It took less than 2 weeks for them to actually have money. So for those of you who are out there that are frustrated how long settlements take, or the transparency of it, this is why you have a direct relationship, and the length in time is typically by the quality of the submission. So we'll help you, train you what's needed. There'll be crystal clear communication. If there's any outstanding items that are coming on your submission, our system alerts you, so you know right up front. Even if you're new to this, you'll know at all times if anything's missing and where your case is at and where we are on the offers. And by all means, I'm happy to have extra training sessions, or we've got a really wonderful demo videos that are out there to train you. There's a lot of really good content. When it goes into, let's go into commissions here. This is often asked a bunch. There are 2 ways to work with our firm. We have lead referral agents where somebody would watch videos. It's about 10 minutes of explainer videos. This would give you a Magna certification. We enter into a lead referral agreement, and that's where the representatives are handing their clients over to us, and our direct-to-consumer channel handles the entire transaction. If that's the case, then you don't need to be life settlement licensed because you're not actually doing any settlements. You've referred them to us. We build you into our origination fee as a provider, and we're going to give you 25% of our fee. So it's roughly $2,500 per million that you would get as a referral source, and that's really similar to what we would pay a marketing company online or anyone else. So it's really just a marketing expense. If you have a broker dealer that doesn't allow you to do settlements, sometimes that can be an option for you. If you're interested in getting your settlement license, it's going to work very similar to like what a realtor does for a home sale. You represent the seller in between the seller and the buyer, and because you have that license, you're able to take a piece of the gross offer. Now, from our standpoint, it doesn't really change what we offer on the file, regardless if you're getting an origination fee or a broker compensation. Broker comps regulatory limit of how much you take, which is between you and your client, is 8% of face or 30% of the offer. So if you have a big offer and it's above 30% of the face value of the policy, then you're going to cap out at 8%. And if you have a smaller offer, then you can't take more than 30% of it. So we found that most life settlement brokers out there, which is nothing wrong if you like to use brokers, they typically are taking 50% of the commission, and sometimes they're taking 70%. There are certain groups where it depends on who your intermediary is, right, as far as how good they are. But the value prop of what they're bringing to the table is a little bit different prior to the 08 crash to what it is after the 08 crash. So the marketplace has really consolidated into big institutional investors now that the regulation is there and the track records are there, and the kind of leaders of the pack have formed. There's really not that many deep multi-billion-dollar funds out there that are investing in the space. So previously, when you had a lot of warehouse providers out there where they're just trying to flip deals for a margin, and they're using their balance sheet money, or maybe they're getting a loan from a private equity group, you really had, you needed the marketplace to decide what the value of the policy is. Nowadays that you have groups like Avita, where we are large institutional pockets that are vertically integrated and own their own provider to originate into their platform, we're going to view based off of an intrinsic value, to where we're trying to live up to our fiduciary duty to the investor and get them the rates that we had said we could do, and therefore we don't need the margin on the provider side. So sometimes we're probably winning, at least for me personally, as it relates to my book, I'm probably winning 80% of the time on the cases that we're competing with. And typically the ones that we're not taking are something that has something that we see that we don't want in our portfolio. It's not necessarily that somebody has a lower cost. It's just something that we don't necessarily want to go after. So there are values for brokers, but if you have your normal cases that are going into it, you might as well come direct and just go for the business. So there are some groups out there where they say, well, I'm going to get one good provider with a deep pocket, and then I'm going to use a broker to cover the rest of the industry. That's certainly fine. To do that, just be transparent with the group. We respect our broker channel, and we get a lot of supply from those guys. And by all means, if you have those relationships, just make sure they're sending to us. And if you are going to go direct to us and continue to use those relationships, then be fair and let them know up front that you're doing that. Magna, on the secondary market side, there's no group that's put more money in clients' pockets in the last 5 years than us. So it's always beneficial for the reasons we stated before, to make sure that we're seeing the policy. All right, difference. So there's a diverse group on here. It looks like some attorneys, some financial services reps, and then looks like we have some agents on here. So I'm going to give you a high level overview, but beyond having a direct source to capital to try to get bigger offers for your clients and then not have to share your commissions with other people, the real opportunity comes in is that we built tools and have aligned partnerships with other groups that help you identify the life settlement prospects and take care of some of your needs. So Performex is an in-force policy management system out there, where we have an affiliation with them, where we took the quant department in our data analytic team from the fund side and overlaid a life settlement calculator over top of their data. So what the system does for agents is that, let's say, we'll use an example. Let's say there's an agent that's 70. His book of business is really seasoned. Him or her has some 90-year-olds, 80-year-olds, 70, and maybe the young people are in their late 50s, 60s. So on this platform, what it does is it allows the agent to put an e-signature into the computer system, and that platform is going to send out first-party requests to all the carriers. And then on an annual basis, around the anniversary time, it's going to automatically order an in-force illustration and have your annual summary. So the only thing an agent has to do is really just hit upload, and the system's taking care of itself. And what this dashboard that you see on the computer here, this is going to tell you how many anniversaries you have that month, how many policies are going to lapse within the next 5 years, how many term conversion options are coming due, any policies that are not performing to whatever standard you guys set as agents in there, any policies that are underfunded to whatever standard you set, all of the life settlement opportunities that are going to have a probability. So you really have, in a very short period of time, you have the ability to know, where should I do 1035s? Where should we look at settlement opportunities? And for the attorneys that are on this call today, this is the ultimate in compliance. Your financial reps that now have the new DOL requirements, this is a tremendous tool for you. It's very difficult sometimes when most attorneys or financial reps have kind of an insurance guy. It's very difficult sometimes to get them to service the policies on the level that's needed because they're not getting ongoing money. So, it's one thing a lot of people sometimes talk about life settlements to say, look at all the revenue you can make. From this standpoint, for the attorneys that are on, forget about the $1 million of revenue that's potentially sitting in your book for settlements. It's the $5 million of liability that you have that keeps you up at night. So even if you have a really solid agent with a crack staff that's all over the servicing of these policies, they will not do as an efficient job as what this platform can do. Any of those sectors that you click on, you then have at the bottom of the screen every policy that does it, and then you can set alerts to it. So tremendous capability. And I think the part that makes it great is that Magna is going to pay us and subsidize the cost of this platform for you. So it's what we're doing is we say, well, if we're bringing that kind of value, we're not asking for you not to shop the files or do whatever you need to do, especially if you're in a bid counter bid state. We're just saying that give us the last look on the file. If we can meet or beat it, then we would hope to close the business. And if we can't and you close with someone else, well, then that's fine. We're happy to grow the industry and to help you out and keep your fiduciary roles intact. The next thing that I think is, this slide looks familiar. We went through it earlier as to what the valuation. So we have a life settlement calculator that this allows you for groups that need to, maybe you have a website where you're getting web leads and you're not sure what a good deal is or not a good deal. This calculator, you're not trying to make offers to clients. You're trying to find out what's worth your time to work. And what we found is that we can ask 7 questions and have a 75 to 80% chance, depends on what version of the calculator you're using. Some have 3 questions, some go to 7, that we have a very high probability of whether the deal works or not. This would be a report that you could send clients if you'd like, and the clients could mess around with this tab at the bottom where it says the same or better, worse, or serious condition, and they can go through the spectrum, and that's going to be a dynamic chart that changes the chart and changes what the offer could be. So a life settlement calculator is a tremendous tool for you to field underwrite, and this is really kind of the front piece of what we overlaid over Performex. Lots of marketing things. So let's say we go through the Performex, we've identified all the best prospects in your book of business, and then now you've kind of have them in a bucket of which one should I call right now, which one should I start emailing. We have a platform if you need it to put clients on an email drip. We have tons of collateral for you. If you're a lead referral agent, we will be using the Magna branded material. And if you are a licensed life settlement producer, we will white label your logos over top of our data and help you market to your prospects. Everything is trackable. We can show how long they've been on the site. We can show what videos they watch, what white papers they read, you name it. We've got a full marketing team that are tremendous to work with in-house. There's just a couple benefits to have a $4 billion fund own you. And we've got a lot of great tools for producers. So we're not just teaching you about settlements or giving you aggressive offers for your settlements. We're also helping you grow as a business, be organized, and stay lean and mean so you don't need to hire a bunch of staff or bog yourself down doing a lot of busy work. It's our goal that we are putting you in the pocket as much as possible and doing the majority of the lift. We'll take on the expense of the medical records, the life expectancies, and use these tools to gather the data so that you can be well positioned and grow as a business. With that, Geri, I'd like to maybe open it up to the group for some questions, and then we'll, maybe we'll give it another 20 minutes and wrap it up.
Okay. I have some questions too, if you when you're ready for them. One of the things that I liked about the enforced policy management, one of your tools that you had, it showed that 90% of seniors who lapsed a policy would have considered a life settlement had they known of the possibility. 79% of clients feel agents should inform them about life settlement options. 55% of seniors allow their life insurance policies to lapse, viewing it as a liability instead of an asset. And, those are the calls that I'm getting. 10,000 seniors will turn 65 years old every day for the next 18 years. So those statistics can, really point agents in the right direction of being able to offer this as a service to their clients. To me, I see it as a very valuable service that you can offer.
Sure. For those of you that are on, you go to the chat section if you have questions, and then just write into the chat, and then myself and Geri and the moderators can see those, and we'll make sure that we get them answered. Yes, the Performix platform is tremendously. It's an absolute game changer. This is
because you can load all your existing policies in there. Isn't that what you said?
Yeah, there's a fair amount of agents that are towards the back of their career, and they've never, we kind of went through an internet revolution in the last even 10 years. It's a pretty big difference. There's a lot of companies and individual producers out there that do not have CRMs or databases, and they may not have gathered all the data that they have, and it's tough to provide the level of service needed. I think a most shocking statistic that I saw from a leading trade organization is that 96% of the life insurance agents out there haven't talked to their clients in the last 5 years.
Whoa.
I mean, that is a unbelievable stat. So it's hard to get on the phone and deal with all the stuff from a policy servicing standpoint for an agent, even if they mean well. And it's even harder when they don't have any kind of compensation. Sometimes the general agents get renewal streams, but most of the agents don't on the independent side into the UL and term contracts. So very important that the platform is going to really, with a relatively easy way to onboard. You're looking at 15 to 20 minutes to upload your e-signature and go through the onboarding process with Performix. And once they start sending out all those requests, that's the biggest lift, is the first time you onboard. And then after that, the system's doing it automatically. So you're going to have your entire book of business in one place on one screen and have all the filters that you need. And if you want to send, you can send customized quotes out from the platform to your clients. So it's an absolute game changer. Even without the life settlement component, it'll revolutionize their book of business. And when you run into that worst case scenario where, I mean, let's face it, everybody in their 80s and 90s, for the half of them, didn't know they were going to live that long, and they underfunded their contract. On top of that, you have 10 years of low interest rates, did not fare well for the UL contracts. So, being able to have this tool in your chest to save the day for some of these people that are going to get absolutely crushed in that policy is a really tremendous, situation. I've got a case right now. It's a $20 million deal. The client is 84 years old, and her life expectancy came back at over 10 years. Now, this particular client has $3.5 million into the policy, and she's obviously in relatively good health. The contract does have some NLG provisions. The sad thing on the policy is that it doesn't go past age 100. A lot of times these policies from the 80s and 90s do not have maturity extension riders on them. So there's over a 15% chance that that lady makes it to age 100 and they have lost everything they put into the policy. Now, I'm not saying the family doesn't want to roll the dice and go for it, but right now we're able to offer on this scenario 3.7 million. That's a $200,000 over what they put into the policy, had the coverage the whole time and could be totally out of it and not face that chance of outliving their maturity. So, you know, if that wasn't a forward-leaning advisor that was really, you know, on top of their game, that client, even in a year or two from now, if they don't have a health change, the probability of them outliving the coverage is even higher. So it's really important, guys, that as your book matures, especially the attorneys on board, you have to know where these cases are at. You do not need to have some liability situation where you're supposed to be watching over it and get blown out of the water. So part of this, yes, we are trying to farm for life settlements, and we are, you know, shortening the deal cycle and making it much easier to do. But we were really particular as to what platform we used and to make sure that it actually solves a pain point for somebody. So highly recommend everybody that would like to take advantage of Magna's subsidy of the 200 accounts that we're subsidizing right out of the gate. If you have more files than 200, as long as they're over the age of 70, then we're happy to subsidize more. Even if you have 10,000, we're not going to blink an eye at it. So, you know, happy to have those relationships. Reach out to myself. The email is there at the bottom, or use that phone number there, and we'll set up a demo. I'll have a link to send to you for the Performix platform, and tremendous, tremendous tool.
Great. One of the questions I get is on insurance trusts, ILITs. People think they don't need them anymore because, you know, most of the time people created them 20 years ago because of the tax scenario, and they're trying to keep the money from the insurance out of their estate for estate tax purposes. Can you deal with a policy that's in an ILIT?
Yes. Yep.
Okay.
There's really low liability on these transactions from the standpoint that almost all the states are regulated, and all parties to the transactions have to sign off on it. So you're not only getting sign off on the owner and the insureds, but you're also getting sign off on the beneficiaries. When they're trust owned, then we're going to get a copy of the trust and make sure, you know, what's what, and that we have everybody signing off on it. So absolutely, I'd say half of the policies that we do are really all trust owned.
Okay.
Any of the, especially the big ones, those are all advanced estate tax planning that are going on.
Right.
I think the deals that surprise most people are when you have these big family offices or ultra high net worth people. They don't need the money, but the one pain that they have, besides like taxes, is writing those checks and those premium checks. I see it time and time again. Every 3 to 5 years, it seems like the agents are selling deals to us, except not for a lump sum, but they're selling them for retained death benefit. So that's where we're going to take over 100% of the cost of the insurance, but we're only getting a piece of the death benefit. And that's going to be irrevocable beneficiaries for the family members that have that. And this is where this goes back to when I said we're a buy and hold fund. We're not a shop that's flipping off the asset for a margin. So if you are doing those retained death benefits and you're dealing with some $50, $100 million, $200 million family office, you don't want to have like their deal getting flipped all over the place, and then some investor 3 people down the line, you know, stop paying those premiums. So it's important that when you're doing those bigger high-end transactions, that you realize you're coming with a fund manager that's going to hold the assets in place, and that, you know, we're getting top dollar, and that we're creative depending on what your client's needs, whether they want lump sum upfront to pay for health expenses, or they want to have retained death benefit to benefit the family afterwards.
Okay, great. You talked about term conversions. Do you purchase the term policies and convert them?
Yeah, so usually when you have the lead referral agents, we're purchasing them as terms, and we're converting them later after we own it. For 99 out of 100, when you have somebody that's life settlement licensed, usually we're going to price the case with a conversion illustration. And once we put an offer out in writing, the agent is having the client, you pay the minimum amount to convert the policy. We'll reimburse the cost on top of the offer to the client. So that will be escrowed and come out with them. And then that way it's a really clean path. The agent and whoever their GA is the upline when they converted it, because they did it before we bought the transaction. And a lot of those happen. I just did one in California. I thought it was really good. If you got a minute for a story, $4 million term policy, 5 months left on the conversion option, only 2 years left on the term policy itself. The guy had cancer, pretty late stage, although he was really doing well with the treatment plan. In the end, life expectancy was almost 7 years. He wasn't going to die in time while they had the policy. The family didn't have the money to pay the conversion premium for the policy. So the agent, first life settlement transaction, so applaud him for getting educated and getting outside his comfort zone. They converted $3 million of the term policy to a permanent. We purchased that contract for $1 million. The agent had his settlement license and was able to take $150,000 of commission and pass $850 on to the insured. That insured then had the money to convert the other $1 million and keep a paid up $1 million policy for his family. And in the end, I want to say the conversion comp was on the total of 4 million of conversion into the two policies was about another 150,000. So the agent had did well for himself in his life, but he never made 300,000 bucks on a single transaction before. And the client, although he did well, right? Obviously he had $4 million policy, had a couple businesses. He never had 850,000 bucks sitting in his checking account. I mean, the agent laughed and was really pretty happy, obviously, but he was telling me how the client goes to the grocery store, picks up his paper, and gets his coffee. Then he heads up to the bank. This is his routine that he does every day. And he, even though he'd went through the transaction, they obviously filled out the paperwork. Going into his checking account and seeing that there's 850,000 bucks in cash sitting there, that a few days or a few weeks before, he's thinking that he's not going to have the policy to take care of his family. It was a pretty rewarding situation. And although I know that agent was really happy to make a good living, I think it was also a pretty good feeling that I've been in the insurance. This is him speaking to me. He's been in the insurance business for 30 years, asking and trying to convince a lot of people of what they need, to write a check to him for a product for something they need. And that was his first time of really getting to be able to give a check to a client and have all the good things that came from it. So term conversions are a slam dunk. For the ones that have enough arbitrage, those are a slam dunk way to really do great in settlements, because no client turns down. You're competing with zero cash value and they're about to lose the coverage. So no client ever turns them down. And the fact that you can take both sides on comp, if you want, sometimes the agents just make the commission on the conversion and are on down the road. But great way to do it. This is what really benefits, where Magna has kind of a bigger buy box, will go down to the age 65. This is when it really starts mattering. A lot of the brokers and providers out there, they really don't want to see clients under the age of 75 because they want everybody below 10 years. So this is where one of those benefits that you could have a whole section of your book that's now able to do something with it that you just wouldn't have had before.
Great. So you mentioned cash value. How do you deal with that?
So, well, we're competing with it, right? You got to do better than cash.
Right.
I would say the people that have sometimes more than enough cash in the policy to cover the cost, to where the clients don't really have costs, a lot of times it's going to go back to now being our own fund. A lot of times we can do loan optimization. So don't strip the policies out before you send them to us. Leave the cash in the policy and let's see if we can get them better than the surrender value. And sometimes it's way better. So when you have those policies that have a ton of cash in it, send in a copy of the policy with an annual statement. And what that's going to do is us as a fund manager, after we take ownership, we might take the loan from the policy and strip it all out and then reinvest it into other policies. So that's going to drive our yield up really high as far as what internal rate of return we can make as an investor, which then allows us, knowing that ahead of time, that allows us to then be far more aggressive on the offer. You know, in the end, obviously we're not going to offer something less than what their cash is, and we're trying to build room not only for the client to want to do it, so that we get the yield for our investor and we have a deal, but we're also trying to make sure the producers are making, you know, a good living and want to do settlements. You know, it doesn't do any good to try to get a bunch of guys to do free deals forever, and then they're never going to do any business with you. So we're pretty aggressive on it, and don't strip the cash. You know, leave it in and let's look at it and let us run the optimizations to tell you what's best.
Awesome. Okay, I think I've asked all my questions that I had.
All right.
Hopefully it were questions that people were thinking.
Well, hopefully we learned some things. Everybody, that the 941-408-6181 is my best number to reach me. Happy to do one-on-one coaching or go through any prospects. The submission queue is at the bottom of the screen, the submit at magna-life.com. By all means, if you have opportunities you want to talk about or you want to send to us, let's take a look. And if you're interested in the Performix platform subsidy that Magna has, please reach out or phone or email to me and we'll get you started and set up with a Performix demo. It's relatively a quick process to get set up and going. So thank you for having me, Geri. Look forward to seeing you and your reps in person in Nashville, and have a good day.
Thank you very much. I think it's a great product that you guys are offering, and it solves a problem that you don't even know exists sometimes, and
Right.
You know, or what's on your clients' minds, and you have to be in front of them and tell them they have options, because a lot of people when they get older are thinking, God, why am I paying these premiums? You know, I can't continue to do so, or I need money for my health care, or whatever the reasons are, you know. So it's really awesome. I like your products.
Yep, definitely important. And there is case law in the books, on the books in California, where an RIA did not do this, disclose a settlement option, and had recommended them to surrender the policy. And an agent that wrote the policy had went out and shopped it without them knowing, and in the end was able to get a $500,000 offer. That insured passed away during the trial, but that RIA had to pay $500,000 to that family. So be mindful that is statutes matter, but what really runs the company or the country on liability standpoint is case law. And there are now case law that are putting fiduciaries right into the spotlight of whether it's important to you or not, you have to at least be aware of this and looking at the options. We're happy to help you satisfy those requirements. And if clients don't want to do it, so be it. But you really got to bring it up. You know, I don't want to see anybody get in any trouble. But thank you very much, Geri.
Thank you. Blessings.